There are two methods to calculate depreciation. One is straight line method, other one is written down value method. What is the formula to calculate the depreciation? Cost minus scrap divided by life of the asset. Where the PV factor, that is net cash flow, is less, that option has to be chosen. Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Today we are in the 6th session of Unit 4, that is lease financing. So my dear students, in a previous session we have studied many concepts relating to lease financing. Let us quickly recall what we have discussed in a previous session. So in a previous session, we have studied this topic, that is regulatory framework for leasing in India. So as I have already told you, there is no particular statute for governing this lease financing in India. So we have discussed in detail how this lease financing has been governed. Next is content of lease agreement. Of course, the two parties under lease agreement is lessor as well as a lessee, where there is an agreement between these two parties which is called as lease agreement, and we have studied what are the contents that has to be included under lease agreement. And the next topic we have discussed is problem of leasing in India. So what are the problems which are faced by lease financing in India? So these are the few topics which we have discussed in a previous session. In today's session, we shall continue with new topic, that is we shall solve a problem on lease financing. Now go through the problem here. So in most of the question paper they have not asked this question, that is relating to lease financing, but for time being we shall discuss what is the or how to solve the problem on lease financing. Now if you see the problem, go through the problem here. X Limited is in the business of manufacturing steel utensils. Now, X Limited is an organization which is going to manufacture what? Steel utensils. The firm is planning to add a new product line. Now, they wanted to expand the business, for which they wanted to add a new product line. In the sense, they wanted to add a machinery. The firm can either buy the required machinery or get it on lease. So there are two options for this X Limited. Either they can buy the machinery or they can take the machinery on lease basis. Now let us see what they have given further. The machinery can be purchased for 3,45,000. Now if they want to purchase the machinery, then the total cost of the machinery is 3,45,000 and having a life of 5 years. Now the life of that particular machinery is 5 years and salvage value is rupees 45,000. That is, scrap value of the machinery is rupees 45,000. Now here X Limited is having an option to purchase, where if they want to purchase the machinery, the cost they have given, that is 3,45,000, and the life of the asset is 5 years, as well as they have given the salvage value, that is 45,000. The purchase can be financed by 14% loan. Now, what they are going to do, if they want to borrow the amount in the form of loan, then they have to pay 14% of loan in equal annual installment inclusive of interest becoming due at the end of each year. Now, if they want to borrow the loan, then they have to pay 14% interest, and along with that they have to pay the installment at the end of every year. Alternatively, so here one more option is there for the X Limited. So the first option was about to buy the machine, and the second one is alternatively the machine can be taken 1 year lease rental. So either they can buy or they can go for lease basis. So where they have to pay 1 year lease rental for rupees 1,20,000. Now what is a lease rental to be paid by the X Limited? That is 1,20,000 for 5 years. Now if they want to go for lease financing, then they have to pay the lease rental 1,20,000 each year for 5 years. Depreciation is to be charged at straight line method. Now, here we have to calculate the depreciation on asset on the basis of straight line method. So, you know, there are two methods to calculate depreciation. One is straight line method, other one is written down value method. So, here depreciation is calculated on straight line method. tax at 50% and the rate of tax is levied is 50%. Advise the company. Now, it is our duty to advise the company regarding the option it should go for. That is, there are two options. One is to buy as well as one is to go for lease financing. So here we have to advise. So based on the total cost of outflow, so we have to advise whether it is better to purchase an asset or go for lease financing. And they have given further particulars here. That is, they have given year 1, 2, 3, 4, 5. That is for 5 years. Next, PV factor at 7% and PV factor at 14%. Suppose in the question, if they have not given the PV factor, then how to calculate PV factor? That is 1 plus R. So this is how you are going to calculate the PV factor. It is here they have given PV factor of 7%. That is for first year it is 0.935, second year 0.873 and third year 0.816 and fourth year 0.763 and the fifth year 0.713. In the same way, they have given PV factor for 14%, that is 0.877, and for second year 0.769 and the third year 0.675 and the fourth year 0.592 and the fifth year 0.519. Now, suppose if they don't give the PV factor, as I told you, you have to apply the formula and calculate the PV factor. Now, we shall go through the solution here. So how to solve this? So your first step is to calculate the depreciation. So your first step is to calculate the depreciation. So here we have to calculate depreciation on straight line method. So here they have given cost of the asset as well as life of the asset and scrap value of the asset. Using that information, we have to calculate the depreciation. So the formula is depreciation is equal to cost minus scrap divided by life of the machinery. Now what is the cost of the asset? That is 3,45,000. So write the cost 3,45,000 minus scrap or salvage value. How much they have given? 45,000. So minus 45,000 divided by number of or life of the asset. So here the life of the asset they have given, that is 5 years. So take all the information what they have given in the question and calculate the depreciation. So the depreciation is rupees 60,000 every year. So we are done with the first step. So what you have to do first? We have to calculate the depreciation. What is the formula to calculate the depreciation? Cost minus scrap divided by life of the asset. So here cost 3,45,000 minus scrap is 45,000 divided by 5 years. So the total depreciation to be charged every year is rupees 60,000. Now the second step is calculation of installment, that is annual installment. For that, so what is the formula to calculate annual installment? That is cost of the asset divided by PV factor. So we have to calculate PV factor of 14%. Why 14%? Because the rate of interest is 14%. So if you see the question, so the rate of interest, if they borrow loan, the rate of interest is 14%. So based on this, we have to calculate the annual installment. So what is the formula to calculate annual installment? That annual installment is equal to cost of the asset divided by PV factor of this 14%. So they have given 14% PV factor, right? So that is of 5 years. So add all the PV factor of 5 years. So when you add 0.877 plus 0.769, so we have to add all this plus 0.675 plus 0.592 plus 0.519. So when you add all this, so you'll get the total PV factor is 3.432. Now apply the formula. Annual installment is equal to total cost of the asset. So what is the cost? That is 3,45,000 divided by PV factor, that is total PV factor of 14%. So why we are going to add that of 14%? Because we are going to, or the rate of interest on loan is 14%. So we are taking into consideration 14% PV factor. So divide by 14% PV factor, that is total of 14% PV factor. So that is 3.432. So the annual installment is how much? 1,525,000. So 1,525,000 is the annual installment. Now go through the table here. That is, we have to calculate the cash outflow. So how to calculate? So here I have divided into different columns. So your first column is all about the year. So how much year they have given? 5 years. So first year, second year, third year, fourth year and fifth year. Next is loan amount outstanding. So your second column is all about loan amount outstanding. Third column, interest. So interest is how much? That is 14%. Next, principal amount. Next, we are having installment. So we have to draw the column. Next, in your first year. So come to the first year. Now, what is the loan amount outstanding in the first year? So if they are going to purchase the amount, so what is the loan amount? So they have to borrow the loan. So what is the loan amount? That is, cost of the asset is 3,45,000. So that much they have to borrow. So 3,45,000 is the loan amount outstanding in the first year. Now, how to calculate the interest? So upon this amount, that is 3,45,000 into 14%. That is 14 divided by 100. So you'll get the interest 48,300. Next, come to the installment. So we have already calculated the installment. So what is the annual installment? It is 1,05,25. So we don't know what is the principal, but we know the installment. That is 1,05,25. Now what is the formula to calculate installment? So installment is equal to principal plus interest. Principal plus interest. Now this is a formula to calculate installment. Now we know interest as well as principal. Now how to calculate interest as well as installment? Now how to calculate the principal? Installment minus interest is equal to principal. So how to calculate principal? That is installment minus interest. So installment minus interest, so we'll get the principal. So that is 1,05,25 minus 48,300. So the principal amount in the first year is 52,225. Hope you have understood how we are going to calculate the principal amount if they have given installment as well as if we know the interest. Now come to the second year. Now second year. So now what is the loan amount outstanding in the second year? So for this, outstanding amount in the first year is 3,45,000 minus principal, that is 52,225. So how to calculate? That is 3,45,000 is the amount payable in the first year, upon which we have paid the first year principal amount. So deduct that. It is 52,225. So the amount is 2,92,775. That is the amount payable or outstanding in the second year. Now, in the same way, calculate the interest. That is on 2,92,775 into 14%. So, we'll get the interest 40,989. Now, we know the installment amount. So, installment amount remains same for all the 5 years. It is 1,05,25. Now, how to calculate the principal? That is installment minus interest. So, we'll get the principal 59,536. So, this is about second year. In the same way, we have to calculate the third year. So, what is the amount outstanding in the third year? That is second year outstanding minus principal amount. Now, what is second year outstanding? That is 2,92,775 minus what is the principal we have paid in the second year? 59,536. So this is the amount payable in the third year. In the same way, we have to calculate the interest. So how to calculate the interest? 2,33,239 into 14%. So we have to calculate the interest. We know what is the installment amount. Now installment amount minus interest. So we'll get the principal amount. That is 1,05,25 minus 32,653. We'll get the principal amount 67,872. In the same way, come for the fourth year. So what is the amount outstanding in the fourth year? That is third year outstanding minus principal. So third year outstanding is 2,33,239 minus what is the principal amount? 67,872. So this is the amount payable in the 4th year. Calculate interest. So interest on this amount, that is 1,65,367 into 14%. So I'll get 23,151. We know the installment amount, calculate the principal. So 1,525,000 minus 23,151. So the principal amount is 77,374. In the same way for 5th year, so what is the amount left here? That is 87,993. So how to calculate? So how do we know what is the amount outstanding in the 5th year? That is outstanding in the 4th year, that is 1,65,367 minus what is the principal amount? 77,374. So this is the 87,993 is the amount payable. So now in the last year you are not going to calculate this 14% interest. So how to calculate? So here principal amount will be same, that is the amount payable 87,993. Okay. Now you know the installment amount of 1,525,000. Now minus these two, that is installment minus principal, you will get the interest. So this is the balancing figure here. So what is the difference you are going to get? That would be the interest. So that is about how we are going to calculate the cash outflow. So this is a simple table. Only thing is that you have to know how to calculate. Next table is calculation of cash outflow after tax. So we have to see what is the cash outflow after tax. So you know what are the years here? That is we are having 5 years. So we have to calculate the depreciation. We have to calculate the interest at 14%. So then we'll get the total. We have to deduct the tax. Then we'll get the cash outflow. What is the actual cash outflow? Then we have to apply 7% PV. So here we have to apply 7% PV factor. So this is because half of 14%. So here 14% was the interest, right? Half of 14% is 7%. They have given PV factor. Next, net cash outflow. So when you multiply, you will get the net cash outflow. Let us see how we are going to calculate. Now come to the first year. So what is the depreciation? We had already calculated. Right? So what is the depreciation? 60,000. And the depreciation, since we are going to calculate on straight line method, so here the depreciation remains same for all the 5 years. So first year depreciation is 60,000. Interest. So interest we have already calculated 48,300 in the first year. Record the same amount. Now total. Add this depreciation plus interest. So we'll get the total 1,08,300. Now tax is at 50%. That is total. So here total amount is 1,08,300 into 50%. So here total amount into 50%. So we'll get how much? It is 54,150. So half of this, that is 50% of 1,08,300. So we'll get 54,150. Next, cash outflow. What is the amount of installment here? 1,525,000 minus this tax 54,150. That is, how do we get cash outflow? Installment minus tax. So I'll get cash outflow 46,375. Now PV factor of 7%. I have already told you why we are going to take the 7% PV factor, because the rate of interest what they have given on loan is 14%. So half of that, it is 50% is tax, right? So half of that is what? It is 7%. So we have to take the 7% PV factor. So here they have given PV factor of 7%. So first year PV factor of 7% is 0.935. So take that amount. So 0.935. So when you multiply cash outflow into PV factor, you will get net cash outflow, that is 43,361. In the same way, calculate for second year. So come to the second year. As I have told you, since we are going to calculate depreciation on straight line method, depreciation remains same. Interest. So interest we have already calculated. What is the second year interest? It is 40,989. Now add these two, we'll get total, that is 1,989. 50% of tax, that is 1,989 into 50%, we'll get 50,495. Now installment minus tax. So what is the second year installment? That is 1,05,25 minus this tax 50,495 will get 50,030. Now PV factor we know. So they have given in the question what is the PV factor in the second year? 0.873. So record that. So multiply with this, that is cash outflow into PV factor, will get 43,676. In the same way, come for third year. Third year also depreciation remains same. Interest we have already know, that is 32,653. Next add these two, so we'll get 92,653. Next 50% tax. So when you multiply 50%, so we'll get 46,327. Next installment minus tax. So installment is 1,05,25 minus tax, so we'll get 54,198. Now PV factor, so what is the third year PV factor? That is 0.816. So multiply with that, 0.816. That is cash outflow into PV factor, will get 44,226. Now coming to the fourth year, same way. So 60,000 is depreciation. So interest is how much? 23,151. Next, when you add, you'll get the total. Next, tax 50%, that is 83,151 into 50%. So you'll get 41,576. Next, fourth year installment is how much? That is 1,05,25 minus tax 41,576. So I'll get 58,949. Now apply the PV factor of fourth year. So what is the fourth year PV factor? That is 0.763. 0.763, multiply these two, so we'll get net cash outflow. In the same way for fifth year also depreciation remains same. Interest we have already calculated, 12,532. Add these two, so we'll get 72,532. In the same way, calculate the tax, that is 50% of 72,532 will get 36,266. Now cash outflow, installment is 1,05,25 in the fifth year minus this tax, that is 36,266. So I'll get 64,259 into PV factor of fifth year. So what is the PV factor of fifth year? That is 0.713. So multiply with that. 0.713 will get 45,817. So this is how you are going to calculate net cash flow. Now what you have to do, we want total net cash flow, add all these, that is 43,361 and 43,676. Next is 44,226 and 44,978 and 45,817. So the total is 2,22,058. This is the total net cash flow. Now if you see, that is cash flow after tax. So we got 2,22,058, right? So this we have already calculated. Next what you have to do, so the total net cash flow is how much? 2,22,058. Then less fifth year salvage value. Now what do you mean by salvage value? So the total life of the asset is 5 years. So after that what the owner will do? Owner will sell that asset. So that amount is called as what? Salvage value. That is after the life of the asset. So when it is sold, so what the value the owner will get, that is called as salvage value. Now what is the fifth year salvage value? Now we know what is the salvage value they have given in the question. How much? 45,000. So here they have given 45,000 salvage value. So at the end of fifth year, we have to calculate. By using the PV factor, we have to calculate. Now we shall see how we have calculated. That is 0.713. That is of 7%. So we have to apply this 0.713. We'll get 32,085. Next, when you deduct this, so I'll get net cash flow under buying option. So we have got the amount, whatever the amount which is incurred if the X Limited buy that asset. So how much? That is rupees 1,89,973. That is net cash flow in buying option. Now let us see what is the net cash flow in leasing option. So for that we have to prepare a table, calculation of present value after tax under lease option. Now here also the year remains same. So year is 1, 2, 3, 4, 5. So 5 years. What is a lease rental? So lease rental they have directly told in the question. Now go through the question. So what is a lease rent? So if they go for lease financing, they have to pay 1,20,000 as lease rent. So they have directly given in the question, that is 1,20,000 each for 5 installments. So for 5 years they have to pay 1,20,000. So record this 1,20,000. Next, tax is how much? 50%. So 50% is tax. That is 1,20,000 into 50%, you'll get 60,000. Now deduct this 1,20,000 minus 60,000. So I'll get 60,000 as cash outflow. So this is cash outflow. Next, apply 7% PV factor. So I have already told you 14% is what? It is the rate of interest. So half of that, that is 50% is what? 50% is tax rate. So half of that is 7%. So 7% is the PV factor. So PV factor they have given in the question. It is for first year it is 0.735. So here they have given 935. So first year PV factor is 0.935. So we have to take that. So 0.935, that is for cash outflow into PV factor. So we'll get what? Net cash outflow, that is 43,361. So under leasing option also, what is a cash outflow after deducting tax? So lease rent was 1,20,000 less 50% tax. So that is 60,000. So we'll get 60,000 as cash outflow. Now we have to apply the PV factor. That is PV factor of 7%. Now they have given in the question. So what is a PV factor of 7%? That is in the first year it is 0.935. In the same way for second year we have to apply 0.873. In the same way for 5 years we have to apply this 7% PV factor. So we have to apply the first year PV factor, that is 0.935. So when you multiply 60,000 into 0.935, you'll get 56,100. Now come to the second year. Of course we know what is a lease rental, 1,20,000, and the tax rate is 50%. Remaining amount, that is lease rental minus tax, remaining cash outflow is 60%. So apply second year PV factor, that is 0.873. So when you multiply, you'll get 52,380. In the same way for third year, we know lease rental is 1,20,000 minus tax, that is 50%, that is 60,000. So when you deduct, you'll get 60,000. Next, third year PV factor is 0.816. Multiply with this cash outflow into 7% PV factor. So you'll get 48,960. In the same way for fourth year, lease rental remains same, 1,20,000. Tax 50%, that is 60,000. Remaining amount is 60,000. Apply the or multiply it with the PV factor of 7% of fourth year, that is 0.763. Next, 45,780. In the same way for fifth year, 1,20,000. Next, 60,000 is what? That is tax. Remaining amount is how much? 60,000. That is cash outflow into PV factor of fifth year. That is PV factor of 7% for fifth year is 0.713. These all they have given in the question itself. Now multiply, you'll get 42,780. Now in order to get total net cash outflow, so we have to add all these. That is 56,100 plus 52,380 plus 48,960 plus 45,780 plus 42,780. So we'll get 2,46,000. Now we have to compare what is a net cash outflow under buying option and net cash outflow under leasing option. So what is a net cash flow under buying option? It is 1,89,973. So this is under buying option. Then what about leasing option? So under leasing option it is 2,46,000. Now we have to compare these two. Now, where the PV factor, that is net cash flow, is less, that option has to be chosen. Here, in this problem, net cash flow under buying option is less, that is 1,89,973. 3. Whereas under leasing option it is 2,46,000. Now which one is less? It is buying option is less. So buying option is more preferable than leasing option. In the sense where the net cash flow is less, that option has to be selected. So suggestion, so we shall give a suggestion to this X Limited. So buying option is recommended since present value under buying option is less than leasing option. So where the net cash flow is less, so that option has to be selected. So this was a simple problem where in the question they will give us option whether we have to buy an asset or whether we have to lease an asset. So that for which we have to calculate the net cash flow under buying option as well as net cash flow under leasing option, and we have to compare both which option or which net cash flow is less, so that option has to be selected. So in my next session, I am going to discuss one more problem on lease financing. So my dear students, I have already told you in your previous question paper, they have not asked a problem on this lease financing, but in your syllabus, they have given that is problem on lease financing. So we shall discuss 2 problems on lease financing. So in my next session, I am going to discuss one more problem on lease financing. So my dear students, in today's session, we had solved a problem on lease financing. See you all in my next session. Till then, take care. Thank you.